receive electronic shares. That's not true for private companies. If you're an investor, employee, or other shareholder of Twitter, you receive a paper stock certificate that looks something like this. This is the problem we're solving. Let's show you how. Curtis is logging in as Mary. Mary is the paralegal assigned to the Second Sight Corporation. She logs in, clicks Second Sight, and she creates a new Series A preferred certificate to K9 Ventures. She types in Manu's email address, 50,000 shares at a price of 25 cents per share, and sends the certificate. An email is now sent to the President and Secretary of Second Sight, notifying that a new certificate has been issued and requires signature. Henry is the President and the Secretary of Second Sight. He logs in, sees that he has a new task assigned to him, clicks the task, and verifies the certificate to K9 Ventures for 50,000 shares. He digitally signs his name on the President's line. Henry is also the Secretary, so he signs the Secretary's side. As soon as the President and the Secretary sign the certificate, an email is now sent to Manu, notifying him that he has a new certificate from Second Sight. Dear K9 Ventures, you have been issued 50,000 Series A preferred shares for Second Sight. Please confirm receipt of these shares in the secure one-time token below. Manu clicks the link and is asked to log into eShares. He sees his certificate to K9 Ventures for 50,000 shares. He verifies it's been digitally signed by both the President and the Secretary. He's allowed to accept the certificate on behalf of himself or for an entity such as his fund, K9 Ventures. He clicks K9 Ventures, the certificate is deposited into his eShares account and appears in his portfolio under Second Sight. Series A preferred, 50,000 shares. Now this is the part the investors in the audience have been waiting for. Not only can we tell, sorry, can you go back? Thank you. Not only can we tell Manu how much he's paid for his certificate, because all of Manu's portfolio companies issue their stock through eShares, we can tell him the last price anybody has paid for those shares. That means we can mark his investments to market. We can tell him his return on investment, his unrealized gain, and his investment multiplier. We can tell him what his portfolio is worth today. He can't do this without eShares. We've explained the problem we're solving. We've shown you our solution. Now let me tell you why you should care. We started with replacing paper stock certificates. This is a real pain point for companies and investors. To create, FedEx, copy, replace, store a paper certificate costs about $150 a year in paralegal time. We do it for $50. Next, we add options. It's exactly the same workflow, it's just a different piece of paper. Options are more expensive than certificates to manage on paper, about $200 a year. We can do it for $30 because of the sheer volume. Now think about this for a moment. We have a company's shares and we have their options. That means we know their cap table. We've built their cap table bottom up from the issues and option grants themselves. That means the cap table is always correct and always up to date. Companies spend thousands of dollars a year managing their cap tables badly. Who hasn't found a mistake in a cap table before? It's a tremendous pain point. For us, it's a simple add-on. But there's more. We now own the electronic shares of a company. Now we add transfer service with restrictions. We automate the secondary trading of shares. We match buyers and sellers and clear their transactions on a single platform. To sell Twitter stock today costs $5,000. To sell Google on E-Trade, $7. This is the gap we're closing. We can't tell you how much it will cost yet to trade private shares, but it will be closer to $7 than $5,000. We're building the neutral third-party service for the electronic exchange of private shares, the NASDAQ for private companies. And that's why you all should care about this problem. That's why you should care about eShares.
Go ahead, Naval. Add me at hello, but you should get to the last part a lot sooner.
Okay.
Okay.
You didn't have me until the options part, and as soon as the option part came up, I was like, wow, obviously this is a big business. I thought it was a very narrow business, and then obviously it became a much bigger business.
I was a customer in the first 30 seconds. I wasn't an investor until the last 30 seconds.
Good. Val.
I mean, God bless you for turning atoms into bits. We all love that, especially investors. Cap tables are a mess. Option grants are a mess. Knowing how to value your current portfolio is a mess. All of that is great. I think it is a bit of a niche business. Like, you're gonna have to like sign up the law firms and the companies one at a time. It's a slog. What we learned with Angel is we offer this free online Series C closing with docs. Everyone's workflow is custom. It's all a pain in the butt. Signing people up and convincing them to use a free product is far more work than you would think. And just everybody wants to do it their own way. So I think you'll eventually get there because nobody, at the end of the day, the investors don't want to deal with bits. They want, with atoms, they want bits. So you'll get there eventually, but it's going to be a struggle. I would go for the options pitch, the cap table pitch, and the share pitch right away. I don't think you can morph from there to a NASDAQ for private companies because there's like 20 companies working on that, including today, Shares Post has announced some deal with the NASDAQ to be the NASDAQ for private companies. So by the time you get there, they'll kind of already be the exchange. Our learning with Angels has been that you can't mangle deal flow and workflow together. It gets very messy and difficult. You want to be a best of breed player in one of those. You're in the workflow space, just own it. Figure out how to sign up companies en masse. That is your biggest issue. Maybe we should talk with Angelus.
He might be your biggest competitor.
No, I don't want to touch
Partner.
the space. I don't want to touch it. It's a mess.
Okay.
It's hard work. Good luck.
That is your biggest distribution opportunity.
Sandeep, what did you think?
So I loved it. I wish I could sign it up all right now. We wrangle every day to get information from some of our companies when they do later stage rounds. If we have the ability to get that information at the click of a button, I'd pay for it. And I'd sign up all our portfolio companies today.
Yeah, I think the latter part was much better than the earlier part. I happen to do a lot of work with law firms, though, and I think trying to convince people who still use fax machines and work perfect to change is going to be a little bit of a struggle. Is there any?
Can I answer that? Yeah.
Documents.
So we had the same concern when we vetted this idea. Law firms won't do it. There's a lot of inertia and momentum not to do this. So we asked, and we talked to 6 of kind of the top 8 law firms in the Valley. They're dying to fix this problem. So Oric, just 2 weeks ago, partnered with YC. They changed all their form documents to go certificate-less. To me, the bigger risk is actually not that the law firms don't want to adopt it. They've been begging us to come in. We're doing a pilot with 2 of them next month. To me, the bigger risk is actually we're too slow, and they all go certificate-less. I think there's a lot of problems with certificate-less as well, but I think we have this opportunity to come in very quickly and offer them a better solution, because certificate-less is not a good long-term solution either.
Why is that?
The onus then is whenever you start doing transfers of certificate-less shares, the onus is on the law firm to notify each of the new parties about the restrictions that have been transferred implicitly, but that aren't on the actual certificate itself.
The information needs to be passed around whether they're certificates or not.
Yeah, the idea with certificates strikes me as anachronistic. I mean, that's a longer conversation, not one for stage. Sure. You can get rid of it, You should be ready for that world.
Literally, we had this problem like days ago. This came up where I was like yelling at the lawyers, why the fuck do I care about paper certificates anymore?
So I guess, how do we actually push for this? Because obviously, this is when we have our yearly audit, and every year we're going to go through, send us the cap table, send us, so this is ideal. How do we actually take advantage of that without the rest of the network? Can we just say, hey, we'll go certificate-less for our companies, just put everything up and work with you, or do we need to get the company and the law firms to say, yes, we'll do it?
So if the company says yes, we can onboard them. The audit thing and that portfolio view, we have audit view. So auditors you can just assign an auditor. They can do a read only. It starts, I think, with I say it starts with the company, but I think the distribution channel is through the law firms, right? So do you sign up like an Oric to do this? It's 800 companies like that, and then all future companies.
And do you make money providing those services before the stock exchange thing? Because I don't think you should go there for a while, because there's just too much kind of a mess in that market, and it's so much utility that people will happily pay for this, because we're saving hours and hours not tracking those bloody cap tables. So what do I pay you? What does the law firm pay you, the company pay you to actually enable this?
Yeah, companies pay on a per certificate basis, and I think we can be profitable at the options level, certainly at the cap table level.
Naval, what's your best advice for this company? I mean, you're angel funded right now?
We did a concept round with K9 Ventures, a small round to kind of test the market. Yeah, we're 3.
three people, what would be your best advice for a three-person team that's executed wonderfully in a space that people want? Should they go straight to a Series A with a, go to Menlo or Sequoia or some big firm? Should they do an angel round and prove out some more stuff? What would be your best advice?
I think they're going to have a market size issue, so I think the best bet is to take Manu's money, like they have, to basically start making money, because you can charge on this for this on day one. Sign up, 2 or 3 law firms as you have, work with them and make revenue out of them, get profitable, pay Manu dividends or make him some money. But I think the private company exchange thing 10 years from now, let me just tell you right now, impossible. I've been working on that problem for the last 3 years, I'll be working on it for the next 10. I'm not even going to get there. The history of businesses starting to do A, then doing B, then doing C, then morphing into grand plan D is incredibly rare. If you want to do that, just start with that, because that's what Shares Post and Second Market are doing. I think you should just accept that you're going to be an awesome SaaS provider digitizing this horrible offline process. Go and sign up lots of people. Your SaaS business, you're going to get paid on that measure. That's the company you're going to build up. That's the sales force you're going to build up. You're not building an exchange. You can't flip from being a SaaS business to an exchange. They're fundamentally different businesses. So just own this space and it'll be great. It'll be a great cash cow. Yeah. So there's a small number of distribution points, like a couple of major law firms and ourselves and a few others, that can get you a lot of traction very quickly.
Yeah, and Dave, you're shaking your head back and forth. Is that because you disagree with Naval's advice?
I don't need it to be a big business to invest. Most other investors probably would. Like, I could do it on either the SaaS or the exchange model. I need the SaaS product right now. The exchange product is maybe interesting.
Are you in line with Naval's advice? Go SaaS, get money, go get big, get money.
I need to think about it a little bit more, but Naval's usually much fucking smarter than
I'm saying go get customers, don't go get more investors necessarily.
If you look at people who do payroll as a service, if you think of people who do sort of a lot of mundane tasks which can be repeated across, many tens of thousands of employees, they actually make a lot of money. So I don't see why this. I'm not clear this is actually only a small business.
Okay.
I don't know.
May not be. You're right. Google and Twitter and those people.
Mike, you've sold into these law firms constantly. How would you advise them to get into the law firms?
It's a fairly easy market to market to. There's like one conference a year called ILTA every August. You get in front of all the IT directors, but I think your first strategy of finding 1 or 2 very authoritative firms and then taking it out from there and saying that ORIC uses it, a Wilson Sonsini uses it, a MoFo uses it, that's the best way to go. And what about other documents that you could extend this to that have the same problem?
I think we really want to focus on capturing the data, and I totally understand it's a hard problem. A lot of companies, the graveyards are littered with companies trying to do this kind of second market type thing. Our thesis is that the reason they failed is exactly the paper problem, because they're just trying to automate this paper stuff.
It's basically, you as an employee want to sell your shares on the secondary market. I as the CEO want to control who the hell is going to get my shares, and I've paid a great deal of attention as to how I build my syndicate of investors. So I'm going to make it absolutely hard for someone else I don't want to see in my cap table to get those shares. And the fact that you facilitate that piece doesn't change the fact that I want to control my investors. And so I don't think that there is an issue of paper trail and everything.
I mean, the issue is, aren't they making it very onerous to trade these shares in the secondary market? I mean, some companies are just putting in, you don't have the right to do it.
Yeah, and you have all those, rights of first refusals, and the fact that you have to go through the investors to check that someone actually gets out.
The secondary markets aren't really functioning because the investors in the companies don't want the shares traded. So what you're going to find is, even if you get all this data electronically, the companies themselves don't want the shares traded.
But if they could control how they're trading,
even then, it's a much smaller market. I think you should
build
sit on
the SaaS
the market
business.
post if you really
Build
think
the SaaS business now. There's a market for that.
Yeah.
If the opportunity opens up and you decide you want to go to the larger model, great.
Yeah.
I mean, cap table as a service is actually pretty interesting when you think about it. So
there's
I
also
would love to.
I was just thinking of Delaware taxes,
Rally
how
doing
that's going to
cap
help us with Delaware taxes and stuff like that.
Yeah. But on the cap table side, there's Cap Rally who's attacking it directly. I just find these indirect models never work. We say I'm going to do A then B, because there's someone who's just doing B right now. They're just starting with that. So
own A or B.
Yeah, A or B or C or D, not A then B then C then D.
All right, this has been amazing feedback, and as entrepreneurs, take it or not, pursue your own muse. Let's hear it for eShares.
Thanks.